long-term view that you can see on YouTube while I look at the markets. So John invited me here in order to bring a longer-term view of a lot of the markets that you're interested in. Now, what we do is purely technical. Sometimes I put the story behind it, but mostly it's looking at technical charts. And we're very different. Back in 1975, the drummer in my band, I was in a rock and roll band in high school, handed me a book. And he said, you gotta read this book. It's Profit Magic of Stock Transaction Timing. And what that was about cycle analysis, looking at the rhythms in the market. Essentially, you look at charts and it has a lot of lines on it. And it's hard to decipher the energetics that are going on in there. So what I've done is developed a style and taught that to my whole team in order to look at the technicals of the market, but look at it in a different form. And we look at it kind of in an art form, where we look at energies in the market, shown by cycle periods, cycle rhythms that are in the markets. And essentially, when you look at it, squiggly lines on the chart, but it's really a representation of how long people hold on to positions, whether it be monthly or weekly or daily. And the longer time frames are more dominant, because the longer holders, they don't move the markets that much. It's the shorter term traders that move markets a lot, with the noise that we see in the markets. So today's presentation is really looking at metals and mining with that longer term perspective that I normally do a couple times a year. And that's what we're going to look at right now. So we're going to look at cycle analysis of the metals and mining markets. First thing I want to do is just give you a little lesson, and that is building into the cycle analysis so you understand. So this is the gold chart. Of course, everybody's excited about that right now because gold has done incredibly well. And now it's trading up at a high. This chart is actually from Friday, and when I did the charts, so you can see that. So that's what gold looks like when you look back about 14 years here. So this is kind of a blank canvas that we work from. Now what I've done now is I've taken this chart right over here and I put in the energetics, and all of a sudden you can see something really pops out at you. There are actually flows of money that come in and out on a regular basis. And those semicircles that you see on the bottom are what we call the harmonics, the cycle harmonics. Whereas there's a long dominant cycle and an intermediate cycle and a minor cycle. You can actually see, looking at this, how I have only two of those cycles drawn up on the price chart, how there's these energetics that go on in the market. The longer cycle is very clear, the half cycle that you see in there is very clear, and that gives you a good sense. Now what we look at is what we call translations and configuration. So when you look at this right over here, you can see the cycle low was right here, and the cycle low was right here. We call that a positive configuration, and what that tells you essentially is a trend. You have that here also, so you've got this long-term upward trend. And each time you break above the price level, you normally get accelerations to the upside. Now this breakout above this level came very late, so you needed to go into the corrective period, and you can see the corrective period in there as all the cycles come down together is when the money flows come out. It's very, very real when you look at these lines. It's money flows is what that is, and there are in nature, there are all of these cycles that go on. The water cycle, the life and death cycle, and the planet cycling around the suns. It's just everywhere in nature that this goes on, and it goes on in the stock market with some normal flow. So what we do is we just simply take this information and we put in other things, momentum, conditions, support, resistance levels, and we do our projections. And you can see that I have a projection in there where gold is, will follow these same patterns and go up to a specific level. Where do I get the level? Well, we put all of our other information that you can see in here, and that's what it looks like, is we put in support, resistance. And what this shows you is how when gold was in this corrective phase, and you can see the little two minor cycles here that are right there. Once it broke out over here, which was that price level was like 2,100 and something. That really set up this next leg where 1, 2, and 3 cycles were pushing to the upside. And this is where we got extremely bullish, where it broke out there. And now what's coming? Well, you can see that we're projecting gold getting up in here to maybe the 2,900s or 3,000 to that projection level, or maybe a little bit higher out into 25 and 26. And then this period over here where these corrective cycles are, where you probably get some sizable pullback. And that, in my mind, lines up with what's likely to be a bear market in the equities markets and liquidation phases and everything. So that's how that gives you the gold cycle. And you can see the beautiful rhythms in here. Those yellow areas are the final phases where all the short-term traders and intermediate holders and long-term holders all get together and sell out the markets and kind of panic. And when you get this powerful upward shape in there, that shows you that it's really a long-term uptrend, whereas when you get into periods that are much weaker, the liquidation phases are much bigger. You can see this long period in here where it was in a long bear market for a number of years, and then when you got to this final yellow area, it was over with, and then you get into the next rising phase. So we break these down in multiple time frames when we do this work. We always do the work. Now what I'm showing you is a monthly chart, but we always do our work in weekly and daily charts because we have very active traders that are interested in it. So what I'm also going to show you is, by the way, I wanted to give you a little bit closer look in here of what we were just looking at. So that's the chart I just showed you. This is the same thing. And that shows our projections up to and getting into 26 to about 32 to 3,300 in the gold market based on the normal ideal projections that we have out of this movement in here. So we see a strong market basically, except for a period where there's likely to be a little shakeout, and I'll show you that. And as we look into the weekly cycle here in the gold market. So this is the same kind of a chart. It's weekly rhythms that are in the markets. And this period right in here, and it's interesting because the previous presenter just talked about the election time. This time right over here, this period there, takes you out into November and December, and you can see the weekly cycle points to a corrective phase right in here. And I've overlaid the silver cycle in there, which I'll show you in a moment, how it lines up really nicely. So I think that sometime in the next few minutes or days, this gold surge, silver surge that's going on right now is going to stall. I think we're going to get into this minor corrective period. But then you can see right over here what goes on as you get into that next rising phase. And that's when I think this gold is going to get up to the 2,900 and into next year and the following year up into that area in the low 3,200s. When I did my year-end review back in January, well, gold was a lot lower. And based on the analysis we were showing, I said that I thought that sometime in 26, 27, that gold and the S&P 500 would cross in price, somewhere in the 3,500 area. I still think that's the case. Where we get into this bull market in the metals extends and the bear market in the stock market extends. Because we're at extreme valuations right now, as the previous presenter talked about. This is a very key chart to the gold analysis I just showed you, because we know that the lower the price of the dollar, the more dollars it takes to buy the metals. I mean, it's just simple math. And there's a normal inverse correlation between the dollar and the gold market. Here's your dollar market right now with fabulous cycles. It goes back way further before these cycles got off of these rhythms. And again, you can see the harmonics in here. So this is really the key thing. And you look at these yellow zones, and that's where the corrective periods come in. And you can see the beautiful cyclicality that's in there as each of these sell-offs right there come in really precise timing. This one right over here is out in that 26, 27 area, and that says that it's likely the dollar will have a very sharp decline out into that period right there. But this is what's really important. So you'll see that there are 1, 2, 3, 4 minor cycles that are in each of these harmonic families. I want you to notice that in this third one, it almost broke down. And what that tells me in market energetics is that the dollar is very likely in a bear market right now. And this little rally that we're getting right in here right now in the market is essentially this period where we're getting interest rates rebounding, and we're getting the dollar, of course, money flowing back into the dollar because it goes to where it can earn the most money. So while interest rates are rebounding, the dollar is getting a bid. In the Mideast crisis, the dollar getting a bid, a safety bid in that, and that really says to me that it's very likely that, and you can see the resistance area that we put in there, that once the dollar fails again, and I think it's going to do that fairly soon, then that's very likely to get you into a dollar bear market, which is certainly going to feed the metals bull market that we're in right now. Okay, so that was the look at gold. Let's take a look at silver right now. Some of these I'm going to show monthly and weekly, some of them just the monthly charts for the longer term view. So this is silver, and you can see the harmonics that are in there also. They're exquisite. And this break right in here that we had in silver just 3 months ago really looks like this period right over here, which gives you, and by the way, that's the gold cycle, that how it lines up, so you can see how there's a good synchronicity in there, that we're now in the next rising phase. We're looking for the silver market to get up into this area of about 36 right now before it gets into its next corrective period. Now, we look at these kind of time fractals, and I'm not looking real far out, like more than a year or so in most of these charts, but when we're looking at these time fractals, when I get further down, like 6 months from now or 8 months from now, I'll start projecting further out based on the formations that I have and the information that's coming from the charts. So right now we are in this rising phase in silver. It is likely to get up to 36. I actually think that's a conservative view. I think it could get further up in this time frame, but it really, you can see here, 36 to 40, 50 is really what we're looking for from Q2 to Q3 25 in the silver market. So that's kind of my projection. I'll talk a little bit more about some of the dynamics that's going on when we look at the mining stocks. This is the silver weekly, and you can see in here that the silver weekly right here, that cycle, and you can see the rhythms in here. There's the low, there's the low, there's the low, coming up in here. That aligns with this energetic pullback liquidation that I think is going to be in a minor way in this election time, before and after the election, into possibly the December time frame, when the markets, I think, are going to pull back in a significant way. And traditionally, when you look back at liquidation phases, and I don't really think we're going to be in a big liquidation phase in the stock market until sometime in 25. Everything gets sold. I mean, I know there's an intrinsic value in the metals, and it's good to hold them even through those dips. But when you get into liquidations, I mean, nobody thought that oil could go to minus 40, but that happened. So the likelihood of some sizable sell-offs, I think in 25, 26 are out there. But right now, you can see based on this cycle right in here and the configuration here, that it's got about 4 to 6 weeks to correct, and then it begins moving up again. So that's the weekly look at it. So we put that all together, and we see that the daily is giving you upside pressure early in the cycle. The weekly is about to correct, but the monthly gives you the upside pressure. The weekly is about to correct, but that monthly pressure is bigger. So you only get a little bit of a pullback, and then the monthly takes over again, and then you begin moving up again. So this is, I know that investors and producers are mainly the people that are in this room, and it's important to you that, what's going on right now in the prices is going to hold, and we're not going to get into another one of those big liquidations. I actually think that the silver price, people are talking about, well, the breakout is here. I think silver broke out at $27, and that it actually is now extending, and there's a a volume breakout going right now versus a price breakout, and it's just extending right now. So that's why I'm a little bit conservative in where I think the price of silver is going. And the conversations of, I guess, 50 could happen, but right now we're looking at basically an upward resumption beginning after a minor consolidation, and I think it's very viable if it pulls back in November, December period. Now let's look a little bit here at the gold-silver ratio. This is a very interesting chart because what I do is this was when it was 81, and I kind of put together a chart that zeroes out. So you can see this is at 0 here, and that the ratio here when I did it was at 81. And this is when the arrows are going down, or when the price chart goes down, is when gold is weaker than silver. We had one of those going on right over here, and then we had this period where gold did really well. So this is the gold chart, that line right over there, and gold exploding to the upside right now. But guess what? Silver, this is a daily chart. So silver over the last few weeks has now really taken over in a much stronger relative strength to the gold market. And if I look at this in weekly charts, you'll be able to see it broader. I don't have that right now. So go to my website, which I haven't talked about, AskSlim.com, and you'll be able to see our videos and stuff like that if you become a member. And we talk a lot about things like this, the gold-silver ratio. But this is clear to me that historically what happens is that as they both get really strong, the beta silver being much stronger really brings you into a period where gold is weaker, silver is stronger. That's what's going on right now. So I thought that was important to talk about. Let's move into the copper market. We'll look at the monthly and weekly. You can see copper, which had that big rush over here, and now is pulling back. Well, look at these cycle periods here. In this one, there are minor thirds. This is like music. It's the major and minors, and that's what's so fantastic and interesting about it, is it just moves in rhythms like the music does. Right over here, the copper market is correcting on this minor cycle, and look, after this period in, November, December, you get into that next rising phase, and copper is likely to head up into the 5s or 6s, and then we'll see that this was just a little corrective period that was in sync with what I think is going to happen in all the markets around November, December with pullbacks. This is the copper monthly, where we see, copper weekly right now, where you have this weekly cycle in a very nice structure right over here, and you have this triangular shape right over here. It says monthly, but it is weekly. And imagine what happens when it breaks out of a triangle as it moves up through here. Now, triangles are formed because energy is pushing down and up at the same time. But the dominant force always wins, and the dominant force in the copper market really looks up. When you look at the monthly chart, when you look at the weekly chart, here we are again, 5, 6, 7 weeks from now, and this corrective phase is going to end. You can see we have the support in there right now, and then it breaks out from this triangular shape that we see in there. Let's look at uranium. John asked me to look at uranium, and it's not something that a lot of our clients look at, but I still brought it here because we thought there'd be interest in uranium. So let's look at the monthly. By now you understand cycle analysis, right? You can see the rhythms that are in here and how this was a negative cycle. You can see that right here. When you got into this rising phase, these two rising phases, the minor and the dominant, and broke out above that level right over there, you then had a confirmed bullish market. Then you had the next cycle, which was a base essentially. It was positively configured. You had the minor cycle twice, so here's your first minor cycle, your second one, and then you got back into this phase. Now what we have here is our reversal scout, which is a momentum indicator that we offer to our members, and you can see how that really helps you understand the cyclical aspects of the market. So you have this correction right here, and the market turning up right here. I'm sure we're going to get an upturn in momentum, and we're looking for targets of 34, which were already hit, up to 38, probably in coming months. So uranium looks very strong dollars looking at that. Here's your weekly uranium, and you can see that megaphone pattern in there that is forming. And look at these small weekly cycles that you see in there and the beautiful rhythms again. This is actual energetics in the markets. It's money flowing in, money flowing out. And you read how they act in each of these time frames where money is exiting. Is it holding key levels or is it breaking down? You can see right over here where it broke that key level, that it then brought about a month and a half or so of some selling after that. But now that it's moved up and tested this level, that's a very bullish occurrence because it has the energy to get back up to that level. It says to me it has the energy to move through that level. So uranium, very strong, and we'll be looking for, again, this pullback in towards the end of the year, and then after that getting into a solid upside period. Now let's take a look at the miners. Lots of discussion about miners in here. We follow, when we do the metals, we always do the futures. When we do the miners, of course, we do the ETFs. Let's take a look at GDX. We'll look at this. I'm showing you, again, going back to 08 back over there, 08 and 09. And you can see the rhythms in here as they follow the market. Interestingly, you can see this is a lot weaker overall than the gold chart was. As you go through all of these years, and I don't have to tell all of you in here that are producers or investors, that you go through many years, the all-in sustaining costs keeps going up, and if you have gold not going anywhere, silver not going anywhere for a long time, then people are not that anxious to pay up and invest. But still, the harmonics are here. You can see the cyclical action, and you can see where we are right now. So you see this minor cycle and how it shapes beautifully right in here, and you get into this minor rising phase, and you can see that's what's going on right now. See our momentum indicator, the reversal scalp, turned up beautifully in here, and now what we have is a very solid, positive condition in the gold miners. And that is looking to me like, well, we could very easily see 49 in the near term, even up to 55 is what our projections are in there into GDX. Now, this period over here really takes you out into the mid-25, late 25 area time frame, and then this corrective period out over here takes you into 2026. So I actually think that outside of minor pullbacks in the gold miners, that it's likely to continue this upward track that it's in right now. Now look at this chart right here. This is the weekly chart in GDX, and you can see the cycle harmonics in there. I don't make this up. Those are just the energies. It goes up, it goes down, and as the configuration turns positive, you can see this was a neutral or slightly negative configuration. Positive, what does that tell me? It's very high probability that the next rally is going to take out that high. Did it perfectly. Look at, this was just a 2.5 week pullback right over there, and you get into the next rising phase. Look at the rising phase here, the rising phase here, money flowing in. That's all it is. Money flowing in, money flowing out. Well, money is flowing in again, as we know. So we're in this powerful configuration where this could barely pull back. We call this a swamped cycle. Why is it swamped? It's swamped because the monthly is strong, pushing up. It's got dominance. So when the weekly pulls back, it can't pull back far. And then the next cycle pushes it up to another new high. So that's what you see in here. Our projections up there, I didn't put them on the bottom, but I can see it's roughly 45 to 47 incoming weeks in the GDX. So this is a very, very nice looking pattern that we see in there in GDX. Let's take a look at the junior miners, the GDXJ. So you would assume that the junior miners would look a lot like the big, I call them parents, the big ones. And here you can see the cycle rhythms in there as they line up, exquisite. And now in this rising phase, momentum really strong. And you can see our target in here is 57 to 66 in the GDX. Sometime into mid-25. Now we know that and I'll talk about this in silver too, where when you look at the juniors, you're looking at situation where there is a point where you get to earnings leverage. And I'm not sure that that's where we are right now. We'll look at this again in silver, because that's really the question. Are we at the point right now where we're accelerating up in these cycles because investors are speculating? Or is it because we're now getting to the point where the earnings leverage is really clicking in? And probably the junior silver miners are the area where we get that mostly. That's a question, and I've asked some people at this conference that same question and haven't really gotten a good answer yet, or anybody that really had a strong feel. Are we at that point right now? Or is this just another speculative period where the money that's sloshed into AI or sloshed into crypto that the government has produced for, well, it's really 15 years, but certainly since COVID, is just sloshing everywhere, and now it's finding its way into the silver markets. I started trading in 1974, at the age of 24, and that I have seen so many of these periods where stuff gets bought, it really looks like, wow, this is it, and it's a commodity, and all of a sudden, people are, you know, I remember 1980 where people were lining up to sell their silver pots and silver teacups and stuff like that, and it just, you know, came out of the woodwork. So supply can come from a lot of places, and I don't know whether this is right now we're just getting to where the earnings leverage really clicks in, and if that's the case, we're going to see a lot higher prices in the junior miners. This calls for a pullback into this December-January period, and then moving up after that into this period over here. So this is all of 26, 27, and it says to me that we could see much higher prices. So I'm projecting here 57 to 66 into mid-25 for the GDXJ. Let's take a look at SIL, and then we'll look at SILJ. So again, this is the same type of a shape. Let's go back here to the monthly GDXJ and now compare it here. And you can see there's synchronicity. They kind of line up, which makes a lot of sense. And these dashed lines are gold. So, I'm sorry, silver. So that's the silver actual cycle, and this is the silver miner cycle. And then, of course, they're going to line up very closely. When you got into, now you see 1, 2, 3 cycles, all pushing to the downside in here, momentum turns over here. It says to me at that point, the market's going to correct. When is it, how long is the correction going to last? Well, down into this period of the troughs, where it's likely that the sellers will get tired. They'll sell it down enough. And it got down to a similar level right over here that it did before. This miner cycle built the base. Once it got above this level here was the breakout in the silver miners right there, and now we are in this rising phase right over here. Again, just like I showed in the gold market, or gold miners, this is a corrective period that comes out into late, out into 25, 26. So it's a good time frame that we could hold the markets up here for many, many months before they really get into any kind of a significant correction. Here's the silver weekly, and again, you know, these are lining up beautifully where you can get a correction out into November, December, and then after that it takes off again. So we're looking at SIL. The target is 42 by early in 25, which would be a nice, you know, gain from here, about 3 to 4 points on the upside is what we're looking for. But that would be after this corrective period here. So just, you know, when you think about it as a trader, if you were wanting to buy, when it gets up in here to the target zone already, and it extends out the cycle, well, this is not an opportune time to be buying silver. Now, the pullback in here, because we see the configuration is so powerful and momentum is powerful in the weekly, and you look at the monthly, which is dominant and really powerful, that says if silver dips in this November period, that is buying opportunity. If you were at all looking at, being a holder for weeks or for months, or you've been waiting forever to get into this trade, well, now's not the time, but it might be a month from now. That would be a better time in the silver market. Let's look at the junior silvers, which have really taken off. Full disclosure, I bought a lot of these things back before the silver had its big move. SILJ, if somebody asked me at the beginning of the year, what was your favorite stock to invest in for 2024? I told them SILJ because I thought it was going to be the biggest move because of the leverage situation, the way silver moves at a bigger beta, and I thought silver and gold were bullish and it was going to move up, and you can see it did really well. And I bought this around $8 or so and then added to it. And now you can see it's come up here. So our target was 1460. It hit that target just in this last week. And now we're looking up at 1550. And I say a shot at 19. 19 is up here at that last high over there, which we call the dominant cycle peak. But when you look at this low here and this low here and this low here, this is pretty mature right now. So if it's going to make that move, it's going to make that move in 25 into there, and then you get into that corrective period. I didn't draw on the projection right there. But now, I would say probably the next 6-9 months is when we'll see it get to that 1550 area and potentially $19 up there. And that means that if you get a correction, I don't have the SILJ weekly here, but if you do get a correction, then it certainly looks to me like it would be a good buying opportunity. Personally, I'd like to see it pull back to around 12, 12 and a half, because I did some selling last week, yes, a little prematurely, and I would like to, my position right now feels short because I don't have enough longs. So I think it's a good buying opportunity if we pull back. This is our proprietary market condition monitor. I just took a kind of a snippet in here. What this does is we have some proprietary momentum indicators. We call a reversal scout, the slim ribbon. I showed you the reversal scout on some of these charts. And we build our algorithms into this in different time periods. And then it essentially spits out a trade setup condition to us. We have several apps that are like this for different time frames also. You can dial in the time frame you're interested in, but you can see that essentially what's happened in here is that GLD bullish, GDX very bullish, GDXJ very bullish, SLV, the silver market, bullish. If you see it down the arrow, that's because it went from very bullish to bullish in a little correction that we had in the previous week, and you can see that this is red, which looks at the daily. Put the algorithm into the daily, so the SLV has a little bit of a negative there as GLD does. So those have down ticks, but they're still bullish. This is a short-term reading that we're looking at right now. And SIL and SILJ, very bullish, while silver hit a little pullback. They couldn't pull back at all. So that brings me to the end of this, and I know we're going to do a Q&A. What I really hope is that what you take away from this is that there are normal flows of money in the market. That normally when you look at these charts and you just see, candlestick charts going up and down, you don't really have a feel for those energetics or what those energetics mean to the market. When you add in all of the components that we do, which are the cycle rhythms, the momentum conditions, support and resistance levels, projection levels, cycle configurations, translations. I have a cycle analysis workshop that has 24 video modules in it that teaches all of this that we have available on our site. And if anybody, I know we're going to have a little Q&A right now, and if anybody has any questions that later on you'd like to get answered or you'd like to become a member, you can write to Matt, my partner, and he'll give you a membership special, and you'll be able to get our information on a regular basis. We produce on Wednesdays for our members only something we call Future Speak, which we cover gold, silver every single week. And then I produce a live show every 2 weeks and a recorded show in the middle of that. I do 3 a month the live ones have our whole team, and you'll be able to get a great feel for the analysis. If you go to YouTube, Ask Slim Team is the YouTube channel, and you'll see my shows that I put on every single Friday on there, plus a lot of clips that we put on there. And John, ready for you.
Thanks, Slim. Great job. You know, one of the things I think is very helpful to us. Can you go back to that slide that you just had about 2-3 slides ago? That one. Yep. Question to everyone in the room that's in the mining business. When's the last time you saw gold and silver with a slightly negative bias and the miners all up? That's really bullish, right? We're seeing GDX, GDXJ, which has about 20 billion in it collectively in those two ETFs, cranking right now. We're seeing, I just chose to ask Slim to talk about SIL as the largest silver, larger cap ETF, as well as SILJ, which handles the small and mid cap exposure. Both of those are in bullish trends. And so what you're seeing is outperformance now from the equities, which we've all been waiting for at least, 4 years, since August of 2020. That was the peak in the last cycle, right? So I thought having Slim come in to talk about this stuff would be really important because he's been doing this 50 years. I've been doing technicals for 24 years. I use technical analysis every single day in our portfolio. If you check our website, fenneconsulting.com/performance, a lot of that alpha has been generated by the kind of stuff that Slim is talking about. We look at technicals every single day before we buy anything. So we're not going to have time for Q&A right now, Slim, because we went a little bit over. We got to get to the next presentation.
Sure.
Slim's going to be here in the back. We would love for you to talk to him a little bit more, because one of the cool things about Slim is that he's not a mining guy. He's not a metals guy. He looks at everything in the market. So I thought it was really important to have him here. Let's give him a hand.